What is going on, investors? Hopefully you guys are doing well out there. Probably a little bit better if a large portion of your IRA account was not wrapped up into Amazon stock, because in the after hours, after reporting Q2 numbers, this stock is down over 6.5%. That is now 6.75%. That is down $240 in the after hours. That's after being down nearly 1% during the regular trade. Amazon stock is absolutely getting smoked right now, okay? And we'll talk about this from a technical perspective as well, because this stock was up here at $3,600 before the day started, and we have gapped down really hard, all the way down here to a $3,350 per share. Again, about down 7% here in the after hours. Talk about Amazon from a technical perspective. Is this a buy the dip opportunity? Is this pulling back into any ranges, any zones here where you could potentially want to buy Amazon? Now, I will say, in my IRA account, I have 4 shares of Amazon, and I want you to remind you that in an IRA, it's not a 401k account where you can deposit almost as much as you want. IRA accounts, you're limited to $6,000 a year. So when we're talking about a $3,000 stock, it's a little tough to go overweight on it, but somehow I've managed to do that. I started buying Amazon back in 2016 when it was at $800 per share. I've pretty much bought 1 share a year since then. I have about $14,000, although that's going to go way down. We're probably under 13 or around $13,000 in Amazon stock. So I just wanted to show you that, not to flex, not to brag, because certainly I'm going to take a big hit tomorrow. I am going to show you that because I'm going to read through these Q2 numbers and talk about Q3 guidance, and I'm going to do it in the most unbiased way as I possibly can. So while I have a lot of my wealth tied up into Amazon, at least in my IRA account, I don't give a crap about that, okay? What I care about is making you a good investor, and when we look at these numbers, we'll see if they were any good or not. Now, first thing is first, the Q3 guidance. So we just got through Q2, and I'll show you here on Q2, we had $113 billion, that is with a B, $113 billion worth of revenue over at Amazon. They have product sales and they have service sales. That's a mix of AWS, obviously, a mix of their own first-party sales on Amazon.com, advertising, those types of things. Now, I want to show you this. For the third quarter, which is the quarter upcoming, Amazon expects between $1.06 and $112 billion worth of revenue. So the estimate was for 118, and 118 makes sense, right? Because we went from 113, you'd expect Amazon, a big company like that, to constantly be growing, to put on a 118 number on the next quarter on the revenue side. But no, they're actually guiding below what we just did in Q2. So I am a little concerned about that. I'm not super excited about revenue declining quarter over quarter. Are they sandbagging? Are they just putting up light numbers because they just appointed a new CEO and they want to put up light numbers and then beat them magically when Q3 comes around? I don't necessarily think that's the case. I think Amazon has enough visibility into their business to understand where the revenue is going to be. Now, this quarter, upcoming Q3, probably seasonally a little soft, right? You have vacations, you have those types of things, take away money you're spending on Amazon, and you're just gearing up for Q4 gift giving, where Amazon typically shines along with many other e-commerce sites. But I've got to be a little concerned that we're going to go from $113 billion in revenue down in the next quarter. Not super excited about that. I'll be honest with that. Now, let's move on to the numbers. We'll take a look at these in depth here. We'll take a look at cash flows, balance sheet, all the good things that we normally cover here on the channel. This is the 3 months ended. The right-hand column is our most recent quarter. The left-hand column is the previous year on a quarterly basis. Same thing on the right-hand side, except we've got a 6-month view over there. We got our net product sales. Again, we went from 50 billion up to 58 billion. Net service sales, 38 to 55. So on a year-over-year basis, on a quarterly basis, we went from 89 billion up to 113. So in a broader view, getting up in our helicopter and kind of looking down on Amazon, this is absolutely phenomenal growth, but this is about what the street was expecting, right? And same thing for the 6 month. We went from 164 billion up to 221 billion dollars. I don't want to gloss over these numbers like they're nothing. There is almost no companies in the stock market. In fact, I can't think of one off the top of my head that's doing north of $100 billion in revenue in a quarter. Okay, Apple is very close, I believe. They might be there, but there's not a lot of companies that do this. This is why I am overweight Amazon stock to a certain degree, is because of this size of revenue, okay? With this size of revenue, leaves a lot of margin for error. Now, this is a low margin business, okay? This is not one of those high margin business. We just looked at Facebook. This is not anywhere close to that. Take a look at our cost of sales coming in at $64 billion. Fulfillment coming in at $17.7 billion. Technology and content, 13.9. Marketing, 7.5. General administrative up nicely to $2.1 billion. You're seeing year over year on a quarterly basis, all these numbers are climbing, as you'd expect when you grow these types of sales. That gives us total operating expenses from $83 billion all the way up to $105. So when I talked about the margins on this business off $113 billion worth of sales, you had to spend $105 billion. That gives you operating income of, I don't want to say only, but $7.7 billion. Again, off of $113 billion worth of revenue, you only cleared $7.7 billion. That's why when you see these numbers start decline like this, it really doesn't make you excited as an investor, because this operating income's not particularly impressive, especially if you want to compare it to a Facebook, to Apple, to Microsoft, to a number of Google, any number of other stocks inside the FANG group, and especially if you want to expand it to other groups. Look, $7 billion worth of operating income, not particularly impressive. So you really want to see that revenue growth on that top side. And unfortunately, it doesn't look like Amazon is going to deliver it. Now, a lot of it flowed down to the net income side of the balance sheet. And we'll talk about that here in a second a little bit more, because we come to our cash flow statements. They lead off with this. But the reason why I read statement of operation is because you pull down that $7.7 billion worth of net income. So I like to tell the story of net income and then come tell the story of cash flows, which I'll be honest with you, really don't look that great. So we've got our 3 months ended here, 20 over 21. Last year, we pulled down a $5.3 billion net income. This year, we pulled down 7.78. After we add back in things like depreciation, stock-based compensation, subtract some things like accounts receivable and others, take a look at this. Cash flows by operations was actually at $20.6 billion. Now they've slipped to $12.7 billion. So that's a problem. Notice that is a really, really light print. Okay. And then when we look at the last 6 months, we went down from $23 billion down to $17 billion. For the last 12 months, it does paint a little bit better story, because you probably get Q4 numbers in there. That's really why Amazon's, is the bane of his existence is primarily Christmas holiday. But keep in mind, we had Prime Day mixed in here, and Prime Day is as big as some of the shopping days during Christmas. And we didn't necessarily see that flow through to we saw it flow through a little bit to net income, but from cash flows, we really didn't see that. Now, Amazon continues to reinvest in their business, and that's one of the reasons why I do like this stock. They're super aggressive. They're not necessarily doing share buybacks. They're not doing dividends. They're not doing the things that we're seeing maybe like an Apple, a Google, and a Facebook are doing. They're aggressively reinvesting in their business, and I like that aggression, because notice on purchase of property, plant, and equipment, we went from 7.5. We nearly doubled that to 14.28. In fact, the $14.28 billion purchase of property, plant, and equipment actually exceeded what we did for 6 months last year. So you're seeing the acceleration, okay? In 6 months, they spent 14.2. This year, just in the last 3 months, we spent $14.3 billion on that type of stuff. Now, they are issuing some debt for these types of things. When we get over to the balance sheet, we'll see that that's not necessarily that big of a concern. Now, what I want to show you here is segment information. Maybe we can see some stuff here that will make these numbers make it look a little bit better than they are. Okay, we got our 3 months ended here, 2020 over 21. This is North America net sales still coming in strong. We're not seeing like kind of what we're seeing maybe a little bit with Facebook's like user growth here in North America, and absolutely something like Netflix, where North America has kind of topped out on Netflix subscription. We're not seeing that with North America. Okay, we're still seeing really strong growth, not only on a 3-month basis, but on a 6-month basis as well. Operating expenses obviously tick up as well, but our operating income came in nice. It's a little less than half of the operating income, which was at around $7 billion. More than about little less than half of it comes from North America. Now we've got international as well. We've talked about this on previous videos with Amazon, is that the international segment was actually at a tipping point from profitability, and I can kind of see where maybe some of the profit got sucked up here, because take a look at international. On net sales last year, we were at $2.7 billion in net sales, and we made $345 million worth of operating income. Now this year we went from 22.7 in sales up to 30.7, so we bolted on like over $8 billion worth of sales. Well, unfortunately, our operating income was basically the same from a rounding perspective, right around $360 million. So it looks like to me a lot of operating income got chewed up here in international while we bolted on sales, which we saw evidence of on the statement of operations. We saw sales go up, okay? But what didn't really go up was our operating income, and especially cash flows from operations. Some of that looks like to be this international stuff here as well. Now, AWS is probably the bright spot, okay? I would tell you 4 or 5 years ago, Amazon puts up a quarter like this where AWS goes from 10.8 to 14.8. So they bolted on $4 billion worth of revenue on AWS. And take a look, a lot of it flowed down here to operating income, went from 3.35 to $4.2 billion worth of operating income. I think investors would have been a little bit more excited about that. Take a look at the growth you're seeing over at AWS. In the most recent 3 months, the thing grew pretty nicely at 37%. So here's AWS. Last year we grew at 29%. Now we grew 37%. I did videos on Google, which has their Google Cloud, and Microsoft Azure. They're growing at that 50 some odd percent clip, but Google's cloud business, number one, isn't profitable, but number two, both Azure and Google Cloud are not nearly as mature. Neither of them are doing $14.8 billion in a quarter in terms of revenue. So for Amazon to grow that unit at 37% versus 29 in the previous period is actually a re-acceleration of that business. So you like to see that. That's probably the first thing on this whole report that I actually kind of liked, honestly. Okay, now here's our balance sheet. Coming over to our balance sheet with Amazon. Not a ton to see here. So we've got December here is basically the beginning of the year, right at the tail end of this year. We've got 6 months ended here. We've got about we'll call that $90 billion worth of cash. You got a little bit in inventory, little bit in receivables as well. All things being considered, a lot of property, plant, and equipment. So we saw that invested over on the cash flow statement. So our total assets went from 321 to 360. I don't think anybody's really evaluating Amazon from that perspective. We did talk about there is a little bit more long-term debt as well, more than a little bit. We went from 31.8 up to $50 billion in terms of long-term debt. But again, they have more than that, almost double that in cash and receivables as well. So nothing yet that I would be super concerned with Amazon. Now, those are the numbers with Amazon, and I'll be honest with you, I'm not super impressed by them. But in the after hours, we're off 7%, and I like stocks that go down 7% because it can create buying opportunities for shares of Amazon. Now, what I'm seeing here is we analyze Amazon on a weekly basis. Every Friday, we have a show here where we recap all the FANG stocks, including Amazon. We talk about all the news, but more importantly, I think, is at the end of the show, we go over each stock from a technical perspective. And in this case, we have technically broken a trend with Amazon. So if you've been fans of the show or you've been watching the Amazon chart, you know for over a year, okay, this time last year, this stock kind of peaked up over $2,900 per share or so, and it rallied all the way up here to about $3,500 per share, and it's chopped between that zone for nearly a year. But we started an uptrend back in June, and this thing ripped above our zone here. And so once we broke above 35, this thing rallied pretty hard, all the way very close to $3,800 per share. We hesitated heading into earnings, and now we've completely broken this trend. Okay, we've actually created a large gap here, which I'll imagine will get filled at some point by Amazon. But in the meantime, we have completely broken what was previously an area of resistance up here at 3,500. It acted as a level of support, but it didn't. We actually blew right through it, and we came down here to $3,350 per share. The next stop, I think this thing is probably heading lower to maybe an even 3,300. We see 3,300. I don't necessarily think this is a key technical level, but it is smack dab close to being in the middle of a trading range. Because if you continue to come down with Amazon, I think you have some buying opportunities. You have some buying opportunities all the way down from 2,900 to 3,100. I personally think, and I'm going to use my cursor to circle this, if you can come in here and get Amazon at the bottom of the trading range that it established over the last year, keep in mind, this stock bounced once, twice, 3 times, 4 times, and it might even bounce a 5th time if you can pull down into this zone. That's personally where I'm seeing this. The other reason why I showed you why I'm already kind of overweight Amazon shares is it would take a decline into this range for me to get excited about that. And you probably can imagine that with other investors that are out there as well. It's easy to go overweight Amazon stock, so for it to pull back, it probably would have to pull back significantly for investors to really pile into this one. So I am not at all impressed with these numbers. In fact, I'm a little disappointed. The only saving grace is AWS grew 37% in the quarter, which is just trailing Google Cloud and Azure growth by a little bit. I'm extraordinarily disappointed the fact that we put up $113 billion worth of revenue, and next quarter they're coming in under that at 106 to 112. I'm extremely disappointed that Jeff Bezos walked out the door and handed Andy Jassy this and didn't prepare investors a little bit better, okay? Because now over the next couple weeks, people are going to wonder, well, now that Jeff Bezos is there, what is Amazon going to do? Are they going to be able to handle this transition into a new CEO when they're already guiding for declining quarter-over-quarter revenue growth? I am not super excited about that. So we'll see what happens. But I think you get a nice little pullback into Amazon. It wouldn't surprise me if we at least get to 3,300 on this one, maybe by the end of this week, maybe into next week as well. That seems to me like a logical stopping point. But if the news gets super negative on Amazon, I think you've got some buying opportunities here a little bit lower. Now, on the bright side, what could turn this stock around? Just bring up a stock chart of NVIDIA or a stock chart of Apple after they announced a split. You could bring up a stock chart of Tesla after they announced a split. It's possible, it's very possible, that encourages Amazon to execute a stock split, because as we have this stock go down, it's possible that the executives say, well, one way to turn it around is not necessarily through guiding nice 3/4 revenue, but maybe we turn it around by announcing a stock split. So that would be the saving grace, in my opinion, to this decline. But even then, I'm not buying stocks like this because they're going to split. Maybe they'll split. I'm buying it for revenue growth. And the fact that we're seeing quarter-over-quarter revenues decline is a little disappointing. I'm not saying it's concerning at the current time. It is disappointing, and I'm absolutely eager to see what they do in Q3 to see if they can come over this 112. Maybe this is just absolutely complete sandbagging. They think they're going to come in between 114 and 115, which would be fine in my opinion. Again, the consensus before today's announcements was 118. So if you can come to 114, 115, 116, while it's not where consensus was, it at least would be over what we did in this quarter. So we'll see what happens with Amazon in the coming days and weeks ahead, but the stock is down pretty big, down nearly 7% during the last day of trade, and we'll see what happens with this one going forward. Hopefully, guys, have a great day out there. We'll be back again with more. Good luck with your investments.